What's up guys, I'm Adrian and you're watching Drive to Thrive. In today's video, we'll be taking a look at Affirm. I think there's a nice opportunity for a short-term trade here, so we'll dive into some charts here and also take a look at some options. Before we get over into the charts, I would like to start off with this picture. Now, the question I have for you guys, what stage are we in currently in the stock market as it sits today, which is January 27th? So are we in the enthusiasm phase? Are we in the greed phase? Are we in the delusion? New paradigm, denial? You let me know in the comments below in which phase of the stock market we are in currently. Let's go over to these charts. Alright guys, so let's start off here on our daily chart of Affirm. So as we can see from this chart here, we peaked out at about $176 back on November 8th. And now we are testing these all-time lows here at around that $50 being a nice strong support. So what I've been doing here over the last couple of weeks has been I've been building up my position on Affirm. My average price is sitting at about $60 here, and so a trade I have in mind for a short term here is the $70, but ultimately I want to see if we can hit this 200-day moving average at around that $90. So what I'm thinking here is to get in at the $60 here. My stop loss would be down at $45 because as you can see, 50 seems to be a nice support, and once we break 45, then I think it's going way lower because there's nothing stopping us from going lower. And my price target, like I said, would be around that $90. So that gives me a nice 2-to-1 reward to risk on the stock. Now we'll also take a look at some options here later. So let's zoom out of here and let's see what some of these indicators are suggesting. So our MACD is currently sitting in this bearish momentum here, but looks like we are trying to cross over to the upside and possibly return back to this zero line, which would make sense. So this is on the daily chart. Our stochastic RSI is rotating off of this oversold territory again on its way up, so looking good for short term. Now on our weekly chart here, so we got finally rotated back down from this super overextended reading on the MACD, so we are coming back down to this zero line, and our stochastic is sitting down on the bottom here, so in this oversold territory again, looking to move up. So the charts are looking pretty good for the short term, but there's nothing that says that this thing has to bounce off. We could break this $50 and $45 support and end up going way lower, so that's why it's important to keep that stop loss tight. Now let's go look at some market analysts here. So Affirm is covered by 15 analysts currently, and they have a buy rating. Their target is sitting at about $119, which gives you around 100% upside, so that is pretty nice return if it does materialize. Now, insider trades have been mostly selling from what I can see here in Q1 and Q4, and let's see what the institutions are doing. So institutions have been mostly buying here. Let's see, total inflows, we got about 6 billion versus total outflows around 763 mil here. So scrolling a little bit lower here, overall looks like there's been more buying here as of latest reportings here, so going down to January 26th and around that 28th. Now let's see, short interest on this stock is sitting at about 6.17%, and that is as of January 15th, 2022. Not a lot of short interest. I've seen stocks like Lemonade that are getting shorted like over 30% currently, so not too bad here. Now let's go over and take a look at some of these options. So if I was to buy any kind of long-term options, I think I'd be looking at this June 17th, 2022, which gives you about 138 days. But just to be safe, I'd probably go all the way out to December 16th because, like I said, you want to give the stock time to do its thing and go through its cycles here. So let's go look at some of these June option prices here. So the strike that I'd be interested in is probably this $50 or the $45. So the $50 has a delta of 72, and you're looking at spending up about $18.90 per contract, so times 100, $1,890 on this trade. Now your break even would be 50 plus 1890, so you're looking at $68.90 for your break even. So currently we're sitting at 57 and 71 cents, so you're looking at the upper band here of this resistance. Now, if you do the $45 strike, you're looking at $2,185. Let's go quickly take a look at these December option prices, and these will be more expensive. So $50 strike, you're looking to pay up about $2,325, whereas the $45 strike is about $2,580. So again, a little bit too expensive for me, and what I'd be doing is calling the bottom, so doing something like a bull put spread. Now, if we go over to our chart again, and let's zoom in into the daily here, so we can see that support at $50, where I think would be a good idea to call the bottom. So going over to my options here, going 26 days out to February 25th, let's call the bottom at about that $50, and then let's buy a protective put down here at, let's see, $40. So this would give me a credit of about $195 and a maximum loss of $805. But I think we could get a little bit better spread if we move this over to the mean here. So about $250 I think is reasonable to get in credit. So then your maximum risk on this trade would be $750, and you get to keep that credit as long as Affirm stays anywhere above $50 between now and February 25th. So instead of buying a straight up call option, I'd be looking at these spreads instead. These kind of give you a defined reward and a defined risk. So I think that is it for today, guys. If you enjoyed this video or if you learned something new, please don't forget to smash that like button, and don't forget to leave me a comment where you think we are in this market cycle now. Thank you so much, and enjoy your day, and we'll see you next time. Ciao, ciao.